The first tool of the auction market theory is a market profile. There are only two tools, it's market and volume profiles. The market profile is the original one created by Steidelmeier back in 70s, so let's have a look at it. What is market profile? Market profile is a tool for organizing data. It's nothing more than that. It's not a standalone trading system. It's a tool that will take all your 30-minute candles from each day and put them into this single distribution. The TPO means time price opportunity, which is how each of these lines of letters are called, and each TPO is representing a 130-minute candle. Once day is closed, market profile close into the bell curve with a value area, point of control, and possible anomalies. So if we take a look at here, we have 4 days. Okay, this is obviously, we have 1, 2, 3, 4 distributions. These 3 are already closed into this, bell curve shape. You can see that the white area is representing this 68%, where markets spend the most time, because the market profile is based on time, and the orange level here is showing the POC. This is the price point where market traded the most during the day. This one though is expanded, this which means obviously that you can, in any platforms, you can expand these TPO charts, and you can see each candle by that. So the green label here shows the open. Market opened during the first 30-minute candle and just moved to the lower, and you can see A, B, C, D, E period, and so on and so forth. These are just the 30-minute candles. Once market closed, it's tagged usually by a red letter. So this is really what market profile is. It's nothing too complicated. I know people are always asking me about this, but it's really just a tool that will organize your data and also show different anomalies which we can use for trading. To drive this point a little bit more in depth, you can see there is a TPO chart and there is a normal candlestick chart. There is a volume profile here as well, but you don't need to care about this as that much now. Once again, this is the expanded day, so we will be kind of talking about that one. You can see how market is opening, drives lower straight from the open, then during the C period, it makes this kind of a rejection candle with low wick on a pickup of volume. You have seen these things. This is where market profiles will kind of can give you a little bit of confirmation for these things, because you will clearly be able to see them on the profile. Then we move higher from there towards the close. Okay, once market is closed, you can see once again how the white area is highlighting the value area, and then you have a POC here. Okay, so also let me to make this really clear, the next day here is also expanded. You can see the market opened right here, so this is your opening price of a 30-minute candle. We moved lower first, but then we once again rejected back up, and basically from B to H period we had this kind of a steady move up. What this is called is one-time framing, when the low of one period is not exceeded by the next one. Okay, so you can see that bottom of B period is here, bottom of C period is here, bottom of D period is here, E period, H period, G, H, and then Y exceeded the H period low. So until then, this is called one-time framing. Not something that you necessarily need to know, but it's a market profile term basically. Initial balance and opening range. So initial balance is originally it is supposed to be in futures, marks out the first hour of the RTH session, depending of markets of your choice. The RTH session means regular trading hours. These are the trading hours when markets were trading was done in trading pits. So these are the hours when trading pits used to be opened. For the US index futures like S&P 500, this is 9:30 a.m. Eastern time, and the initial balance is marking out the first hours of this pit session, of these RTH hours. So it's from 9:30 to 10:30 a.m. Eastern time. European markets open at 8 a.m. GMT. This is where the stock exchange in Frankfurt opens, and the initial balance for European markets lasts for the 1 hour as well as any other initial balance until 9 a.m. Okay, so the crude oil is opens at 9 a.m. to an initial balance lasts 1 hour until 10 a.m. This is where the pits in NYMEX were opening, and gold is from 8:20 a.m. till 9:20 a.m. These were when the COMEX pits were, opening with their first trading hour for a day. You can see here, this is the example. This is a 5-minute chart of the initial balance, the high and low. Market breaks it, retest it inside this cluster. To simplify things, it's just another level for your confluence if you are trading on intraday basis. If you are swing trading or watching anything which is not 5-minute chart or a tick chart, you don't need to bother with this, okay? But for day traders, the initial balance is actually nice level of a confluence. When it comes to crypto, the initial balance is marked as a first hour after a new daily candle opens. So this is a London midnight time. In Forex, there are more options to this, and you should be, if you are day trading Forex, you should test this by yourself, because I never honestly tested it. There are the most popular way is marking the whole Asia session. So this would be from new day start until the London Open, which is at it's 7 a.m. London time. Because obviously in Forex, the Asian trading session is usually the one with a lower volatility, so you will often see kind of a failed move outside the Asian highs and Asian lows in FX. Another thing you can do is the first hour of the London Open, but if you are Forex trader, I would stick to the whole Asia session basically. Market profile anomalies. There are 5 of them. Basically, although the point of control is not really anomaly, but it's something you need to pay attention to. The poor highs and poor lows happen when there are 2 or more TPOs creating the equal highs and equal lows in one single day. It shows lack of access and no conviction from traders to step in. Similar to simple PA, these double tops and double bottoms get often retested as pocket of liquidity are resting near them or above below them. The difference between a kind of a simple double top and double bottom is that poor highs and poor lows happen within the same day, and there are these 30-minute tops and bottoms which are basically equal, but there are essentially just a poor structures in the market which get often revisited. I mentioned the word excess. The excess often marks tops and bottoms in a single TPO that marks end of the auction. On the price action chart, this is a 30-minute doji candle basically. It's called tail, and buying tail tells us that responsive buyers are stepping in below the value, and selling tail tells us that responsive sellers are stepping above the value. The longer the tail, the higher the conviction of buyers and sellers. Okay, this is the kind of a old school market profile explanation, but from what we have covered so far, you should probably know that the order flow and volume confluence is the something which will be more important. Obviously, if you have this single 30-minute bar which will call the end of the auction, it's great, but it should trade under or above some other significant level. The best ones are obviously if you have a poor highs or poor lows from the previous days. So these excess candles are just these long wicked failed swings basically. The single prints, the single TPO that created a liquidity gap, inefficiency in the market that often gets filled. I hope you start seeing how all these things are kind of sitting together, you know, the liquidity gap, the excess, the poor structures. The single prints are when market basically is trading during the day and it picks up the speed and moves quickly higher, which is inside this 1 30-minute candle, and this will then show the single print inside, because only one TPO traded there during the day. Once again, you have your common gaps, runaway gaps, and stuff like that. So not all single prints has to get filled. You know, when momentum is strong, market will just leave them behind and, you know, do something like this basically, and you know, you will have unfilled singles here. Ledges, same as poor highs and lows, but happening inside the profile. On price action charts, we can see them as simple SR made from 30-minute candles. Okay, this is something I don't really use much, because it's just obvious. You know, it's a 30-minute SR that happened in the same day. I will show you the examples in a bit, but you will see this is extremely kind of a simple, but once again, how the profiles are structured, you know, it will be, once you get used to them, it will be extremely easy to see all these kind of levels by yourself. And the naked points of control are obviously the point of control from a prior session that were not traded yet. Very good levels for spotting FTRs. FTRs mean here the clusters, taking profits and also entering new positions. So this is something that I already covered a couple of times here. The poor highs and poor lows. Okay, you have a poor high, which is in here. The funny thing is, if you will be trading Bitcoin or if you will be trading any thinner markets, you'll have to increase the tick size of your profile. So although you might see a poor high here, these 30-minute highs won't be 100% equal, which is actually a good thing, because the profile can kind of make you to notice levels which you wouldn't be noticing without that. You know, you can see that these highs are not completely equal, you know, but this is a structure that is lacking basically any sort of excess, and there is also one below here which also is not completely equal lows, but there are very close to that. So market right on the next day it takes them out, but once we make this kind of retest, once again the, you know, inefficient move, leaving the single prints, hitting the poor high where, you know, is likely to cause some, you know, damage, sells off from there. So I think this is getting more and more obvious, hopefully, and I think you must start seeing how all these things just come together as tools that will kind of show you where these things are. So the single prints, I am afraid that I'm not kind of mark them in this price chart, but if we're going to take a look at what singles are, you know, these are these 30-minute candles that just where market just went a little bit too fast, and for this example, above this high of the day there is a gap, which if you will be trading a legacy markets, these gaps often get filled. But also during this candle right here, you know, there are a little bit of singles which are represented here on the profile, and you can see market hits them, pulls back from them. So once again, these are just inefficient kind of prices. Let me just check if yeah, I will show you some more clean examples later on. Ledges, like I said, intraday poor highs, you know, you have a bunch of them here. These are the 30-minute SR levels, you know, market open belows, makes this kind of a drive higher, retest these intraday ledges, moves on. But like I said, it's a 30-minute SR. This is not something you need to pay. You don't really need to use market profile for this. Excess is this single TPO that will just break above this previous high here. We have a singles. This is a purple line that got filled, and on a move down you have a singles here, which are clearly represented by this sharp move in the market here. I don't know why I picked that example for that one. This is really a much cleaner one. This is the definition of the singles, where one single 30-minute chart moves like this, and once we go back we will fill it and kind of stop inside this cluster here. Okay, so but you can see once again the compression from it, although there is your thin move, but these lows are not something you want to go long into, and although you cannot see it here on a price chart, it's this kind of a structure here. We traded basically below it right after next day, or even on the same day after we made a little bit of a pause. So this is once again something that I talked about. The naked points of control, obviously very simple. The market profile will automatically highlight them. It's a point of control from a prior sessions that wasn't traded. Okay, we have one down here. This gets a little bit exceeded. I think it must be somewhere here. This is more of a double distribution here, but somewhere around this area you have a point of control. Market will bounce from it, move into this naked POC. You have a overlap of two. These are volume ones, but doesn't matter. I will talk about that a little bit later. Hits this naked point of control, which is at the level of the cluster here, and sells off from there. Okay, so these are the naked points of control. Okay, the day and opening types. We are coming into the part of the volume profile which I don't actively use in my trading, but I felt like it's worth covering. The thing is with the opening types and day types is they are once again these extremely systematic ways of looking at something, and I feel like when something is too systematic, it's easily exploited by smarter people. So this is something you might want to look into if you will decide to only trade one market or two markets. It's definitely worth to kind of tracking these types and see if there is any use in them. But let me just show you quickly the example. So the day types, days can be divided into different categories based on how market profile formed. Day types can give us the conviction for further direction. There are two trending types, the trending day and double distribution day, and there are two non-trending structures, which is neutral and normal day. The opening types can be identified based on behavior shortly after open, once initial balance is formed. Being able to spot a day type early on can give a useful insight for a trading session. You have open drive, open test drive, open rejection reverse, and open auction. So this is a normal day. The name of a normal day is a little bit a funny one because it's a kind of the most rare one. It's identified by a massive initial balance. This is telling you that market really did all it had in its powers within the first hour, and it will just kind of stay inside the initial balance for a given day. This is actually a good thing to pay attention to when the initial balance is really huge. Huge is a little bit of a broad concept. Once again, for any market you trade, you should categorize what huge and small means, but when a initial balance is big, market is less likely to put any sort of a trend move for a day. The neutral day, this is kind of a most normal one where you have relatively small initial balance and market will just kind of break it to one side and move and use it as any sort of level. This is kind of a basic simple day. The trend days, usually very small initial balance. a market will move and establish this sort of trend, which is signaled by this one time framing I mentioned before. Being able to spot the trend days is good because it's not really a best thing to fade a trend day. If market is in a strong trend, you will try to fade it during the day and you will just get burned. So the trend days are usually, with a strong conviction, not the best things to simply go against until some kind of a key level is reached. The double distribution day is similar to the trend day, but market will open, form a distribution, which is, you can see it wasn't so quick from the open, but makes a little bit of value, then moves for a day and then forms another distribution. So you have these two kind of distributions. This is where you are not too crazy about the value areas from a day and you are just kind of looking at these distributions. Okay, so the opening types. The open test drive is probably the most common one. Market will open, test some level from a previous day and continue the direction. Okay, so right here we are opening above the prior day value. We are testing the value area high and moving from there. The open rejection reverse is the same, but market will just fade the move. We have a poor high from the prior session. We open, take out those poor highs and fade into levels of the previous value. Okay, so this is a kind of a trend following day. This is the mean reversion day. Open drive, this means that market basically, you can see it here from the examples. This is the open drive. Market opens at the A period and it just goes straight from the open. Okay, this is here, you can see, and market went up from there. Funnily enough, this is similar to the inside day, where people and more kind of a conventional wisdom will tell you that just never fade the open drive, always go with the open. But in theory, market opening and going straight one direction the whole day without even ticking one tick below the open is not so likely. So usually you will see some sort of a rejection higher after the open drive and market will fade, and this open drive is actually a good level for a target. Once again, market opens, one tick is tolerable and drives on the one direction, which is this is kind of a when open drive works actually. Open auction, market trades inside the previous day value for the whole session. So this is kind of your inside day candlestick, but also this is inside day value. So tight compression, likely to expand on the next day. Composite profiles. This is where it actually gets a little bit interesting. The composite profiles, when you have a days with overlapping values, they can be merged into the composite profile. The more days equals the stronger value. Personally, I merge all profiles with 3 and more days of the overlapping value. This takes a little bit of a skill, because sometimes you can be really questioning what is worth merging and what not. The merging of volume profiles can be done in both ExoCharts and Sierra chart. Also, you can do it manually in TradingView with a fixed range profile when it comes to volumes. But you can see here, this is ETH. You have 1, 2 composite values. Then you have this one, which is more of a double distribution, but besides the fact that the POC is here, so it's still within all the prior points of control, the trend days like this are not violating this kind of a composite values too much. Okay, so it's kind of a, when the value here with POC is sitting at the same level as the prior ones, you can merge them. Another one, once again, the POC didn't move. We shifted POC a little bit to the upside here, even the value, but I would still say that the main distribution is holding inside this whole area, and these 2 days are also clear for merging. So once again, you have 1, 2, 3, 4, 5, 6, 7 day value of on ETH, and you will know this is a good value where when your profile looks like this. You can see this very, very clean mid kind of a bell curve distribution. If the profile, for example, would look something like I don't know, like your main value would be in here, and then you would have this large bulge of value here, then you did something wrong. But if it looks like this, it's good. And this will give you just very strong levels of support and resistance basically. And as you can see, on the following day, market opens, takes out the poor low, tests the composite value area high. Once again, it doesn't have to be to the tick, it's more important as that you have a level here basically, and then once we reclaim it back, you make this sort of a retest, which is this is not really a pattern, but you will just kind of retest what you previously kind of lost here and move higher. Okay, so these are the composite values. So this is going to be it for the market profile. The composite profiles are important, the anomalies are important. You might want to rewatch this video because this can be quite a bit of information. The day types and opening times, I am not too strict with them, but obviously that's up to you to decide. Anytime I am looking at the market profile chart, I want to look where the composite values are and what the anomalies are basically. These two things are the most important to me. The rest is kind of done on a price action, and once again, this tool for me is a confluence tool. I'm not blindly trading market profile levels basically. So let's jump into volumes.